Hey guys, I've made over $10,000 this week trading US30. In this video, I'm going to share with you the strategy that helped me achieve this. And of course, we'll also get into one of our live trade positions as well. So make sure you watch this video until the very end. And also I want to make it clear, I'm not a financial advisor. Nothing that you see in this video is financial advice. So always make sure to do your own independent research. Now let's get straight into the video. Now the first thing I want to say to all of you is there's a few systems that we use when trading US30. Number one, we have an AI bot, an AI trading system that we've developed. And what it helps us do is identify the highest probability trade setup. We then review that trade setup and then input the trade manually, which obviously increases our success rate overall. Now, for those of you trading US30, you've probably identified that US30 is in a strong uptrend, a strong bullish trend, and we've been on this bullish trend pretty much since November 2025. I mean, even if we zoom out, you can see that we've been on this bullish trend since March last year, where we saw that big sell-off. We found the bottom, which we identified and bought. Again, we're going to talk about this a little later on, but now let's just focus on where we're at. So we're in a strong bullish trend. Now, when you're trading US30, we like to make sure that we're trading the trend, right? There's no point, again, some of you may like to take advantage of what you deem as obvious sell positions. So for example, we caught a nice rally going into the new year. It was obvious that price was going to pull back, price was going to dip, right? So we took our profit, price dipped, sold to the low. What did we do? We identified another buy position, took advantage of the buy position, took our profit again, price sold off on the 13th. What did we do? We put in another buy position. Why? Because price has moved back into this clear area of support where we're expecting essentially traders to start buying price up again to obviously pick up on that trend, that bullish trend, right? We're not expecting price to break a certain level. Now, we have two positions at the moment. Now, you're probably wondering, this should probably be a good time to take profit again, right? And you're right. Why? Because you're identifying we are clearly at a key area of resistance. And are we going to break that trend now, or is it going to happen once we see the release of that Fed interest data at the end of the month? So these are some of the things that we would be looking at, but we're going to talk about that shortly. So we have a nice long position running. The first thing that we decided to do is move our trades to break even. So we have no risk on this position anymore. And this is what so many people make the mistake of doing. They don't move their trades to break even. They let the position run. And then what ends up happening? Price ends up, either hitting their stop loss, and guess what? You've basically made a loss for no reason. When instead, even if prices go back and hit our stop loss, that's fine. It could indicate that price may go lower, maybe to the other side of this trend line. And then what do? We simply load up and buy again. Simple as. So the first thing that you should have, make sure you're taking notes there. The first thing is I'm making sure I'm trading the trend. That's the first thing. The second thing is I'm making sure that I trade nothing less than a 3-to-1 risk to reward. I don't want anything less than a 3-to-1 when trading US30. Why? Because it allows me to accumulate, let's say, 3 losses in a row. So I can lose 3 trades in a row on US30. And then I only need 1 trade using my risk to reward strategy to make back everything I've lost. If you're watching this right now and you're wondering, why aren't I profitable, right? Even when I have, a great success rate. Let's just say you have a 90% success rate, but you're trading against the trend. So you're selling when you really should be buying. And let's say you get lucky 1, 2, 3 times, and maybe you get lucky 4 times, but guess what happens? Your risk to reward probably isn't that good, and then 1 loss completely wipes away your profit. Does that sound familiar? Well, that means you need to adjust your risk to reward profile. And that's actually probably one of the most important things that we get into today. Now, Before we move on, I want to make it clear there's 3 data points that affect US30, right? And after this, guys, don't worry, we're going to get into a live trade position. So well done for making it this far in the video. Now, the first data point that affects US30 is interest rate expectations via bonds, not headlines, right? So this is one of the number 1 drivers of US30. US30 does not trade the economy, right? Institutions watch US 2-year treasury yields, they watch US 10-year treasury yields, they watch the yield curve shape, etc., right? This is why during COVID we saw price rally across the board. You would have thought, okay, with all this bad data, surely price should have continued to the downside, but that didn't happen. We saw the sell-off and then price rallied to the upside. The second data point that we should be focusing on when trading US30, well, that mainly affects US30, is liquidity and positioning. This is the part retail almost never tracks. Institutions care about where stops are clustered, right? And this is what our AI bot actually does. I'm going to get more into our US30 AI bot soon, but this is what we're mainly looking for. Where are the stop losses clustered? Where our option dealers are hedged, right? Where large funds are under positioned. These are some of the key things we want to be looking at. And then last but not least, we're looking at US macro releases that change rate expectation instantly. Not all data matters, and this is what a lot of us need to understand. There's no point sitting at the chart, just waiting for any news headline, because you're probably wasting your time. Not all data matters, right? We want to look at CPI data, that's Consumer Price Index. We want to look at non-farm payrolls, that's NFP jobs. We want to look at FOMC, right? Rates plus guidance. And then we have some secondary, retail sales, PCE, ISM, etc. But we're not looking at all data points. We're not looking at earning headlines or anything like that. We are looking at those main data drivers. So with all this factored in, that's how we increase our profitability. This is how we capture those incredible trade positions and more. Now, before I talk more about that AI box, I know some of you are thinking, wow, that sounds incredible. Let's talk about some live trades now. So we're currently in a US30 trade, right? We've been in this for a while. Like I said, we have a position at the low and then we have a new position at this area. Now, the position that we have here, we're probably going to take profit before market close. We'll see what happens. This trade is currently at break even. Both trades are at break even. Now we're already up significantly, which means we can afford to do this. If I was in a loss for the week or I haven't made any profits yet, it's Friday, I'll probably just take profit, right? I'm over 200 points up, right? I would literally cash out and then that's it. But as we're up significantly, we can let the trade play out a bit. We'll let the trade do its thing. We'll wait for the US market to open. We'll see what happens and take it from there. But this is a nice position because we believe that we could see this area of resistance break today. Now it could happen, closer to, that Fed interest rate decision at the end of the month, or even after that Fed interest rate decision. So really, ideally, this should actually be a good time to take profit out, right? So that's why we've got one position that we will probably cash out of, as I just said. But hopefully we could break this area now, and our bot has given us a profit taking target of 49,972.3, which is a 773 pip move from where we currently are now. That stop loss is 143 pips. So you can already see the risk reward is absolutely exceptional, right? Absolutely exceptional. So why did we take this position? Like I said, very, very clear buying opportunity. We saw structure break. We had a trend line here that broke. We also are essentially at the bottom of a range, a mini range, which is why we also gave it out as well as a secondary position. And number two, like I said, our AI bot is what alerted us to this opportunity as well. So what we're doing next, we're probably going to take profit on this position, right? We'll see what happens once the US market opens. We'll keep a close eye on that. We're going to let our position at 48,851 run. We're going to let that position run. And then, of course, hopefully we see this structure area at 49,601.8 break, right? So that's what we're looking at now. And what I'm going to do for you guys actually is I'm going to go over some more of our trade positions. I'm going to walk you through why we took the trade position. You can see some here, you can see some here, you can see some here as well. We will also talk about what do we do in this case scenario where we buy, price goes up, price dips, where should our stop losses be and more. We'll discuss this more. And what I'm going to do is I'm going to create a video for you guys in my free Telegram group below. Just click the link. Make sure you have the Telegram app downloaded, otherwise the link will not work. So make sure you do that right this second. And I'm going to post a video for you guys, again, completely free. And also, I want to make it clear that for those of you watching, make sure you're subscribed, because I'm going to be posting US30 updates daily on this channel exclusively. And I'm going to talk more about my AI trading bot in my next video for those of you that are interested. So make sure you subscribe and join the free Telegram group. Until next update, guys, seize the day.